As a global investor, Brunner Investment Trust pays close attention to everything that's going on around the world. Fund manager Matthew Tillet joins me today to discuss some of the key topics on his agenda and his outlook for 2022. So you've got big exposure to the luxury goods space through stocks such as LVMH. Now, China's been a big market for these companies. So are you concerned about a weaker economic growth for China and what that might mean for luxury goods demand?
Yeah, it's definitely a concern. I'd say generally when it comes to China, we look at the investment opportunities on a case by case basis. So we don't come at it with an overarching view, on China itself, and that we must have X% exposed to China. What we'll look at is each investment case, and there'll usually be, particularly if it's say a Western company like LVMH that has a big business in China, that will be a strand to the investment case. In some cases, quite an important, quite a valuable strand that we'll look at and incorporate into our fundamental assessment and our assessment of the valuation. In terms of our exposure, we're not heavily into China. That's the first thing to say. Most of the exposure that we have is actually on the consumer end through some of the Western brands, companies like LVMH, as you mentioned, but we also Adidas would be another one. We also own a position in Yum China, which has some of the Yum brands, the rights to those brands in China. There are some pretty attractive long-term growth dynamics for those kinds of businesses. This is a very big market. Let's not forget that. Hundreds and hundreds of millions of people coming into the middle classes each year. Very strong growth in that sort of middle income segment of the population typically drives strong growth in demand for these kinds of consumer products. And Western brands, tend to be in demand. They certainly have been historically. So that's why it's attractive. Again, we're looking for that growth angle, and we also want the kind of quality characteristic that you have with some of those branded businesses. Having said all of that, clearly it's there are, as we've seen recently, there are risks in the Chinese economy. We've been reminded of those recently with both the regulatory crackdown and more recently what we've seen with Evergrande and what that's exposed about some of the financial fragilities within the economy. But for us, that's really about how do you what discount do you put on it, basically. Do you value the earnings stream at the same multiple as you would somewhere else in the world? On a like-for-like basis, possibly not. On the other hand, there's more growth, more long-term growth potential. So we will just factor that in to our valuation analysis, and that's really how we think about it.
What's your outlook for markets in 2022, and which sectors do you think will do the best?
Yes, I think over the last 18 months or so, certainly since the onset of COVID, we've been through a period of really kind of huge volatility when you think about everything that's happened. Not just in terms of the ups and downs of the stock markets itself, but more in some ways more kind of what's happened within the stock market. So we've had periods where what was called the stay-at-home trade at the beginning of COVID, where you had all of the technology stocks just going higher and higher every day, and other parts of the market just super depressed, and then everything reversed with when the vaccines came along and the reopening trade, and interspersed with all that, we've had these fears of deflation, and now we've got fears of inflation and swings from growth to value and back to growth and back to value again. Sometimes it sort of feels a bit like, certainly I imagine to an outside investor anyway, it probably feels a bit like, this is all that matters really in the stock markets, and certainly on a short-term basis, that certainly would seem to be the case at the moment. But my view is that as we look to 2022 and beyond, I think we're going to see a lot less of this kind of wild volatility. And part of my reason for believing that is simply because I do think, I do believe that we're on a path back to some sort of normality. I think, if you look at the way kind of COVID is progressing, certainly in places like the UK and the US, it's kind of. I'm not saying it's going to go away, but it's just going to become something that is we just live with it and we kind of get back to normal. It won't look exactly as it looked before in terms of the economy and society, but it will be it will be a sort of new normal, if you like. And I think as that starts to happen, we'll go back to a period where the drivers of the stock market and the companies that make up the stock market will be much more driven by the underlying fundamentals, longer term fundamentals of those businesses. Which I think that's a good thing actually, given everything that we've been through over the last 18 months. I think that plays to our strength, given our quality bias and a pretty long term approach in the investments approach and investments that we make. I think if you talk about sectors, I mean, we talked about healthcare earlier. I mean, that's a sector that I'm still very optimistic about. I think it's surprisingly, in a way, it's a sector that's actually kind of not done that well, despite some parts of it anyway of what's really the solution to the COVID crisis that we've had, and in many ways, what we've been through is over the last 18 months has highlighted the importance of healthcare. But certainly in the last year or so, it's not done that well. It's certainly not a cyclical industry, so it's not been in favour for much of the last 9 to 12 months or so. But there are lots of parts of the healthcare industry that actually do have quite a significant recovery potential, because people forget that actually, there was quite a lot of areas that were impacted by COVID, like elective surgeries, for example, that weren't able to happen because of everything that else was happening as the healthcare system was trying to deal with COVID-19. I also think that there's likely to be just more of a focus on healthcare longer term because of what's happened, and we've seen in this country that our parts of our health system anyway were not really up to scratch. So there's quite possibly see more investment into areas like medical devices and diagnostics and testing and things like that. That could last for several years. So I'm quite optimistic about the companies that we hold in the sector. They're in the main, they're not highly valued companies either. The shares that look compelling value to me.
So Matthew Tillet from the Brunner Investment Trust, thank you for joining us.